third floor.
Los profesores que
Alright, so you were gonna, hey Gary.
Hey man. Oh. I'm so sorry.
Andy was just talking a little bit. You want to, I don't know if you can physically sit for a little while, but
You mean like can you reduce the energy to
yeah,
sit? Or?
that's
Oh,
the
you need me to
question.
sit while he's talking?
No, stand.
I'm thrilled to sit.
No, stand up.
Okay.
All right, so you were going to talk a little bit about something that was like relative to the decision here in YieldX.
I was.
Do you remember the call we had? You don't
Yes,
have
well,
to
just prompt me.
prompt you.
Yeah.
The like go long or sell.
Right. So it's being a founder or being an entrepreneur is an intensely personal decision.
Yeah.
And so one of the things yet you're also balancing lots of different interests. You're balancing the interest of your investors, you're balancing the interest of your partners, you're balancing the interest of your board of directors and your employees. But ultimately, at its heart, it's an intensely personal decision. And with one of those decisions, only the person can make it. And so you may make the right one or the wrong one, but it's intensely personal at its core. And it's really hard for someone on the outside who may be an investor like us to say, come on, man, go for it. Because we have diversified portfolios of investments and businesses. And in fact, if you think about the concept of a diversified portfolio, I say this to founders all the time. The success of your individual business or company doesn't really affect me. What affects me is the diversification of 24 companies that I invest in over a 4-year period out of one fund. That's all you have. But I'm constructing a diversified portfolio that I know 60 to 70% are probably not going to return the money, and 20 to 30% will return my capital, and 1 or 2 will deliver those outside returns. So in that balance that's not equal, how can you say to someone, you should go for it?
So would you back Doug again if you had been an investor and he had taken the term deal?
Yes, because that's a great set of experiences. Most first-time entrepreneurs don't have an experience of having to build a company, having to raise outside capital, having to sell it, have to balance. So that could be a good set of experiences.
So we're talking about a company that got a very, very early offer, as we discussed. But maybe you can, so Andy gave a little bit of his background and his career trajectory that led him to a fund that wouldn't invest in his company. And you have a really interesting career trajectory, which maybe you can start.
I think I couldn't get Gary to invest in my company either.
Did you try?
Of course I tried.
Why'd you
Let me ask you a quick, I don't recall, but let me ask you a quick question.
You don't recall because like it didn't even register.
No, I want to get back to that in a minute, but there was something interesting that just happened. Did you ask him, would he invest in the person who, if he took the term deal, which was the early deal, right?
Yeah.
Well, the interesting part there that was interesting is he wouldn't have not known the other outcome. Like
Right.
if they took that first deal, you just wouldn't know.
Right.
So I think that's something that I'm always fascinated by, which is people are so crippled by decisions. There's just no way to know what would have happened, at the time when you're making a decision. So much of this is Monday morning quarterbacking that are fascinating. So anyway,
Let's move over into the middle.
yeah. I've known this man since I was 14, 15 years old because my family had a liquor store in Springfield, New Jersey that I started working at when I was 14 that I later turned into something called Wine Library and launched one of the first 3 or 4 e-commerce wine businesses in America called WineLibrary.com back in 1996. And your professor here was a hardcore wine nerd that knew way too much about wine for such a young dude, and I was a child, but that was my whole life and what I cared about. And I built my dad's business from a $3 to a $65 million business with no capital infusion in 98 to 2003.
Wait, you didn't make a modest $14 million loan?
No modest $14 million loan. But he came to America. I was born in Belarus with no language and $100 and lived in a studio apartment in Queens with 8 family members. So he's very much my hero to build it up to a $3 million level. But I did it on digital marketing innovation of the time. In 1997, I had an email newsletter that had 91% open rates because nobody was email marketing. And instead of sending catalogs from Sherry Lehman's or Zacky's, I was getting to customers first with the hottest wines on this thing, email. And I was trying to send as many emails as possible in 97 because I thought people would eventually charge for it. Like it was just like, it seemed such a great deal. Launching a website, email, really. I mean, you know, it's funny, it's like, but very honestly, you know, if we start talking about VR, we're gonna make a lot of assumptions right now that are either gonna play out or not play out in a 20, 30 year window. 1996 internet was a whole different fucking world. And so I kept innovating, bought the word wine on, you know, the day Google AdWords came out for 5 cents a click. That was a good bet. And owned it for a long time and just did a lot of smart digital marketing things. And then I did a show on YouTube a couple months after YouTube came out called Wine Library TV, where I sat in front of a camera and drank 4 bottles of wine for 20 minutes. And a lot of people watched that, and that's how I kind of hit the scene in the tech world. And then what happened was YouTube sold for $1.7 billion. And I was like, fuck, I was right about e-com, I was right about Google AdWords, I was right about, you know, cookie retargeting banner ads. I was right about YouTube. Maybe this skill I have for selling more, you know, Burgundy and Priorat can be deployed against something more financially interesting. So when I read the article about YouTube's sale, there was one article that featured Ron Conway's angel investment. And I said, what the fuck's an angel investor? I Googled it and, you know, within 20 minutes decided I would be an angel investor. And went to South by Southwest 3 months later, became friends with Ev Williams and Blaine Cook, the original CTO. And I think your firm at the time, me and Kevin Rose, bought up Blaine's original stock of Twitter. So I bought a ton of Twitter, real cheap. I didn't think of myself as an angel investor, I just thought that was a smart decision because I thought Twitter would be big. Then I went home from South by, made a,
By the way?
well, it did for me because I sold my shares, so I did good. But came home, made a video, I was making wine videos, came home, made a video that said, Facebook should be worried about Twitter. There was a guy, head of platform at the time at Facebook that I didn't know by the name of Dave Morin. He sent me an email, like, hey, this video has gone really viral inside of Facebook. Would you come out to Palo Alto and give a talk? So I came to a room like this in front of the whole company, there was only 400 employees, and talked about consumer behavior and why I thought the world was changing. That caught Mark's attention. We went out to dinner that night, and a week later I bought a lot of stock from his parents. And then somehow I got David Karp to reopen the B round of Tumblr at a, by the way, stick with me here, the B round at a $14 million valuation. And I made an investment into Tumblr. So the first 3 things I invested in were Twitter, Facebook, and Tumblr. Yeah, I mean, it was when I was smart. I was making bets on things that I thought would be successful. I didn't think of myself as an investor. I got progressively stupider after that.
Why do you think that was?
Because I started trying to be an investor. I literally went from being, I'm a businessman, these are good businesses, this is good. The market changed. I mean, this is Tumblr B round 2008, B round 14 million. Now every fake bullshit entrepreneur running around this campus wants 7 million, 4 million for their bullshit idea that they have no prayer on because entrepreneurship is popular, and instead of going to Bain and McKinsey, they think they can start a fucking app that people are gonna use.
Those of you who are clapping, are you clapping because you just described you?
They're always clapping and laughing when I speak because it's the truth. We all know it. This is the greatest era of fake entrepreneurship ever, which makes it challenging for anybody here that wants to go into venture investing. I barely created one investment for myself last year because I'm so scared of the early stage ecosystem, because the supply and demand curve of actual entrepreneurs that can see these things through versus everybody who fancies themselves in that has broke. And so I'm just desperately, so I don't understand macro global economics well enough to understand who and why this is being held up for so long, but I'm just desperately waiting for this whole fucking thing to crash.
But here's the interesting thing to me is that at a certain point, you just decided you were going to be an angel investor. You didn't know what it was, right? So you
That's
just
right.
kind of like, you just decided that's what you were going to be.
I thought there was a moment in time where the internet that I grew up in, built my dad's liquor store, was starting to hit true scale and consumer behavior was about to change for real. And so things like Birchbox and Uber and other things I did well with, they were all still back in 2007 to 2010, 11 time frame, where valuations were a little, not more fair, but I would tell you that I was very early stage. We were still dealing with $4 million idea stage. The difference is the entrepreneurs that were building those companies in 2007, 8, 9, 10, they couldn't breathe doing anything else. There was
Also, they didn't think they were going to get rich doing it.
Some of them, I think especially the early part. My South by 2007 experience was wild. I went there, I said something about business, and everybody looked at me like I was the worst piece of shit they'd ever seen. This Web 2.0 movement, growing from the ashes of the first web bubble, these were people that wanted to change the world for real. I just wanted to sell more Peter Michael Le Pavot. That's for you. That was for you. So yeah, that's true. But they were also true entrepreneurs. Every month I meet with 15 people that 10 years ago were gonna be consultants and bankers that now think the Uber of dry cleaning is their way out.
So how do you evaluate that? How do you evaluate that person now compared to what you called were the true believers?
So it really is interesting. I've really gravitated later and later stage because I realized my marketing talent and what I was good at over the last decade is actually far better used for things that have a little maturity to them, where I can use my arbitrage of marketing capabilities. So I've become less interested in the very early stage because the only thing I now evaluate, if I'm going to make an angel investment, pure idea phase, I need to know that person's, my 100% evaluation now is on the person, could care less about the idea, and I need to know if they sold blow pops in junior high. Like, I'm not kidding. Like,
when you say blow pops, it doesn't matter if they sold blow pops as long as they started some business.
Zuck sold, he put music on CDs and sold them in class. That salesmanship DNA, that grit, that I can't breathe without selling thing is very needed, because the other problem we have in the ecosystem, and we deal with this, is we also have a crazy reaction to failure. I've been at too many dinners where the dinner is, I went out of business, and everybody sits around the table in a circle jerk of, oh, it's great that you learned.
And your view is it sucks that you learned?
My view is like, fuck, I don't want to lose my money. And I definitely don't want to buy you dinner and make you feel good that you suck. But right? I mean, we have an unbelievably awesome culture that has a unique twist to it. I don't know. It feels very weird that I've worked very hard my whole fucking life, wrote a $250,000 check. The person was skiing 4 months before his company went out of business, and then I'm supposed to go to a dinner and celebrate the learnings he had in 3 years? That's broken. That's the softness of our current culture. I genuinely believe that.
And do you think that's your view because, does that relate back to your upbringing?
Sure. I think it's a hell of a lot easier to feel the way I feel that because I walked to Kmart when I was 7 and split toilet paper with my mom versus going to, fucking Horace Mann in Columbia. Yes.
But Zuck didn't grow up that way.
Oh, by the way, I'm talking about me personally. I don't think my path is the only path. I think there's killers that went to Horace Mann in Columbia. But if you're asking me the question, yes, I think that my reaction to that.
Killers, you mean homicidal killers?
Yeah. I mean the slang term for real executors. Here's what I know. The balance of this ecosystem, I don't know what the class wants to do, whether build their companies or go and invest. As it currently sits right now, it's never been tougher at the earliest stage because you have just so many pretenders, and the truth is it's hard. It's hard to figure them out. I can ask you about putting music on CDs, but that's only one little tiny data point. But
the number of pretenders you have is correlated with the rise in the dollars available to those pretenders.
And the romance and branding of being an entrepreneur. The brand equity around being an entrepreneur today is stunning. It is stunning for me to in the world, I can't believe how cool it is in real life to be an entrepreneur, and that makes a lot of young individuals gravitate towards that.
But you're suggesting overall that's worse than if those young individuals went to work for Goldman Sachs or McKinsey.
I am, because I'll tell you what we are not.
You don't think the world is a better place, even with the bad ideas?
No, I do not, and let me explain why. Okay. The biggest conversation that I'm fascinated by is the suicide rate at Wharton last year. So we have, in parallel, a narrative that anybody can do it. And everybody's entitled to win in entrepreneurship. And there's an underbelly in our world that I'm concerned about. And we've talked about this in a different panel. This is a big thing. I mean, like, there are certain individuals who've been winning in the first 20 years of their life in a game that was fixed before they played it. And then they go into the market, and the market punches them in the mouth, and they don't know how to react. And so yes, I do think, for the cliche picture that I'm painting right now, there are certain individuals that I just genuinely believe would have had a better life being the number 7 at Facebook instead of the number 1 of shit book, or making $230,000 a year on Wall Street or consulting land at 29 years old. Yes, I think there's a lot of people that will be better. Like, I love entrepreneurship the most, but nothing works when it's forced or off balance. Nothing.
And Andy, your point is just like do anything other than Goldman.
Yeah, sort of, right? In other words,
Unless you're built for Goldman.
Yeah, but what does that mean, right?
Well, I know one thing. Not everybody's built to be an entrepreneur.
No, that's right.
That's insane.
Right, but it works the same way too, right? In other words, it used to be, right? You graduate school and then you'd go work for a bank or a law firm, or you'd go into medicine. Those were a bunch of different paths,
Which
right?
all suck.
Right.
For me.
But some people still do that, right?
Yes.
What entrepreneurship is about being empowered to take control of your professional life.
Okay.
Right, at some level.
Do you know how many people are not capable of that? Do you know how hard entrepreneurship is?
That's the market, though. That's called the market. Not everyone. It won't work for everyone. Not everyone who goes to work at McKinsey or Goldman Sachs is going to be successful.
That's like literally telling a basketball player that you should become a hockey player. You know that, right? Like self-awareness is very important and something that should be debated. Right. And I think we're forcing too many people into the entrepreneurial track that do not have the stomach to be an entrepreneur.
So when you say we're forcing, meaning we are, or Ed is, or who is?
All of us combined, the ecosystem, the self-promotion within itself, the outside world that decided it was the cool thing to talk about for a decade, and these pendulums swing. But what I'm most worried about, and I refer to it because I believe that this room all understand it better than me, I'm dying to know why it can still stay up. Like, there's so much money in the system, there's so much other stuff going on, and government involvement, and so many other variables that are playing out that are just above my pay grade, that I'm fascinated by when they cripple, because this much fakeness has an inevitable fate.
So why are you raising a fund?
I'm raising a fund because I'm going Series B and Series C, where I think my marketing machine that I've spent, so my behavior, as you guys know, over the last 5-6 years, instead of where I had a lot of leverage to raise capital and do my thing, I took a major on paper step back and built a client service digital social agency that I've grown in the last 5 years from 0 to 100 million in revenue, right? To give me leverage for when the shit hits the fan. And so what I want to do with the fund in the short term is deploy it against later stage things that need a marketing arbitrage to create victory.
So you've basically said, I'm going to make these wild investments and I'll do it in Series B because that's where the funnel pinch works for me.
They feel a lot less wild for me coming from angel, A, so there's a lot more data of an actual business, and B, I can look at it and say, okay, her business, she's got it all down. Her one opening or opportunity or soft spot is marketing arbitrage the way I do it, which I believe is best in class. That's a good bet for me because I could bring the smartest money to the table.
And so it's not just that you've opened a barbershop to get paid to do haircuts in a downturn so that you don't lose all your venture capital investable dollars. It's that there's a symbiosis between the barbershop.
Even further, the reason I am building VaynerMedia right now is long term, I think it plays out for me on private equity, where I buy businesses at scale and run them through the machine, as I call VaynerMedia, and make that arbitrage. I took a step back 7 years ago and said, you know what, now that I'm hanging out with all these fancy people, you characters, and way fancier than you, Travis, Saka, those kind of dudes, I'm like, I don't look like these dudes and chicks. I'm not these people. Like, here's what I am. I'm a marketer, and let me quadruple down at that skill, build infrastructure around that, and deploy it against this world I believe in. So that's what I've been focused on.
And where does wine fit into this?
So wine fits into it in a couple of different ways. I'll get very real and transparent with you guys. And you know that you have such a unique perspective on this. My dad and I are very different. You know, like as different as you can really get. You know, personality-wise, viewing the world, our backgrounds. As I was building Wine Library and I was getting more attention and things of that nature, there was a real forming tension for the first time in our relationship because, as you know, my dad gave me the greatest gift. I walked in as a 22-year-old and he gave me free reign. I ran that business, every decision, which is remarkable in hindsight, especially now that I'm 40 and he was 44 when he allowed me to do that. But as the narrative changed, as the business changed, there was tension between our relationship on, him disappearing from the narrative within our industry. And at the same time, I'd made these good bets, and AJ, my brother, was graduating college. Just felt like the right time to make a decision where I would hand it more day to day back to him and the management team I built, Brandon and those guys. So the real life answer is, for anybody that's been in a family business, the family business dynamic created a scenario where, because I had all these other amazing options, there was no reason to create friction with one of the 2 or 3 most important relationships in my life. That's the real answer. And because I haven't been involved day to day as much, I've never enjoyed wine more because I don't look at a label anymore and think profit margin, which has been fun actually. Ironically, I'm probably enjoying wine more than ever. And, in a different way, the way that you look at it, because you have such a passion for it, I don't want to buy Dujac or things of that nature, but I think I might make a run at some point in creating a $300 to $800 million yellowtail-like brand, just because I think I can do it, and because I want to buy the New York Jets. I don't know. That's
a good opportunity for us to see, in the unlikely event that any of you have questions for these folks. Happy to field them. You want to start?
Yes. So with this sort of inflated.
What's your name?
Clifton.
Clifton.
Smith. Nice to meet you.
Nice to meet you, man.
In this sort of inflated ecosystem that you painted of wannabe entrepreneurs, do you feel that it has at least provided more good innovation that wouldn't have existed otherwise?
I don't know, is the real answer. My intuition is probably a little bit, yes. But I genuinely believe that great entrepreneurs making great things, like Travis was an entrepreneur before, Garrett was an entrepreneur, I don't know. Not as much as some people may want to think, because I think those people would have saw it through. I think we grossly underestimate hard wiring and talent. I think we grossly underestimate hard wiring and talent. I think those things would have broke through and would have happened anyway, and were happening anyway. But probably, if you have more people playing the game that wouldn't have played the game and done something else, of course there's going to be some, but I don't think as much upside, and I'm not sure as much casualty for the players in a net offsetting game. My opinion, what do you think?
I think this is where you and I disagree a little bit.
Yep.
Although we agree on some potential down. I think the karma in the world is increased by more people believing themselves to be entrepreneurs, whether they have the skills or be successful or not. I think the karma in the world is increased. So I think overall.
I also think the internet itself has created the opportunity as much as anything else. The infrastructure costs to be in the game are so low. That's as much of a thing. I don't think anybody became more talented or capable or visionary because the internet came along. Right. I think it just exposed the opportunity at a greater level.
Here's what's interesting. At the same time, that also made it much more difficult for any individual to succeed because everyone can do it.
I totally agree.
Right?
I totally agree.
Makes it infinitely more difficult for us to be investors too.
For sure.
Right?
I agree, but the cost of starting is so low.
Zero.
So low. You just say it. You're an entrepreneur. Mazel tov.
Zero.
So what are the
I'm so used to doing Q&A. I'm like, what?
What are the ramifications?
You're asking your own guy.
We know we're on your show. What are the ramifications of this fallout for all of the venture funds? Because there are some interesting structural ramifications to what you're saying, right? Because obviously, and I do agree that there's definitely more garbage in, and there definitely, it used to be that it was nerdy, it was geeky, people would ignore you, they would want to go talk to the people who run hedge funds, and that's great. And that was actually a much more comfortable place to be for a whole bunch of reasons. But structurally, we're going to be screwed if we have a whole wave of venture funds investing in companies that never should have attracted investment capital.
That's what's going to happen.
Behind them, a whole bunch of LPs managing pension funds and endowments that lose their money by investing in these misguided venture funds.
Except that software, internet-based technology as an asset class is pretty small. So the damage, right? If 50% of all venture investments in the venture funds this year went bust, it's $15 billion. It's not that big. Right?
It's just big for the human individuals.
For me, that's real money.
No, but it's not big for like macroeconomics.
Yeah.
Right. There's no.
That's true.
In the first bubble, we shifted the risk to the public.
Yep.
That's more meaningful. Now we've contained the risk to institutional investors. When we raised our last fund this year, earlier in the year, when we were out talking to our investors, we told them that we believe for the next 10 years, venture returns on average will be lower than they were the 10 years before, and they should expect the returns from our fund and all the funds they invest in to be somewhere between 20 and 50% lower.
That's called sandbagging.
Yes, but also believe it.
Yeah.
And so you look at the data suggests.
So are you
right?
also raising money for a Union Square Ventures short fund?
No. But our last two investments have been in hedge funds, though. So.
Go ahead.
So you talked a little bit about inflated entrepreneurship, but you could argue there's also right now inflated investors, or inflated VC.
You are damn right, sister.
Like $1 million.
They work hand in hand.
Right. So the question is, who should then? You talked about who should be an entrepreneur, who should be an investor.
I don't get to judge who should. I'm just excited to see how it all plays out. Do you know what I mean? I mean, who should do anything in the world? The people, what I love about this is there'll be plenty of winners during this era. There'll just be a lot more losers. And so that's all, it's just a timing thing. This is so classic. This is every market on everything, always and forever. It's why I love brand so much. This is when brand takes over reality. I know, that was a big statement. So I think a lot of, my crew grew out of the angel, super angel, guys and gals that were successful in their first internet business, made some money, and had enough Twitter followers, let's get to the punchline, to attract unbelievable deal flow. I made a lot, I'm gonna continue to make a lot of money from that pocket, but a lot of us shouldn't necessarily be investors. We should keeping some investment behavior, but we should all really map ourselves. But I think all of this comes down to the supply and demand of the skills, and I just think people are very attracted to this world. And I think especially when I sit in a class like this, I try to reverse engineer every situation I'm in, especially how do I bring value. If I could get one person in this room to actually pay attention tonight, go home, look in the mirror, and try to start deploying aggressive self-awareness, it could change the upside of their lives. I genuinely believe that.
As long as they don't work for Goldman Sachs.
Or they should. I mean, or maybe they should work for their family business. I don't know, but I know that way too many people just go with the flow. I know how strong-minded I am and how easy that is for me to get caught up. And so I just think it's a worthwhile conversation, especially because too many people make a decision on the now, not on when they're actually playing it out. It doesn't really matter to you if you're going this world today. It matters what the impact is over a 36 to 60 month window, and that you have to really quantify that. Looking at data told you what happened. You need to deploy real intuition and other kind of signs to what's going to happen so you can make the decision for you.
So I guess this question is supposed to be around internet tech entrepreneurship. So you guys see this kind of hype going on, craziness going on, but outside this industry, do you see any other industry that was like internet many years ago, started to booming, or in its early days, but has very great potential?
I mean, real estate does this all the time. Like real estate gets hot and then gets real cold when the C players show up. And I'm sure historically every market has gone through this. It's the same old narrative. It's really rinse and repeat. You can deploy the same thesis on this over and over. There's something that's right. Early visionaries take advantage of it, get disproportionate returns on it. Everybody hears about it. The next fast followers move in, do sometimes all right, and then the worst part happens. Everybody shows up.
So it's interesting because you're concerned with the personal cost.
I am.
Of that last part.
Because nobody here really
No, I
gives a fuck about
understand
macroeconomics. They care
Right.
about their lives.
Right.
So that's what I'm deploying here. If this was the macroeconomic summit, maybe I would talk a little bit about
Yeah,
that.
but I think you can combine them, right?
I think so.
History tells us that that bubbles actually may not be a bad thing.
I agree.
They may be a good thing, right? A way to figure out the proper allocation.
You mean
of
when
capital.
people? I totally agree.
Right.
That's the best part of the market, right? Like I really want death
Right.
right now. Like
Right.
I want shit to get carnage.
Right.
Because that's a good, you know.
Right.
Because
Start the
then you
cycle.
get rid of D players.
Right. Right. You start that whole cycle over again.
Yeah, I mean, like people go to these events and like party. Go ahead. I mean, like it's an ecosystem. It's a broken ecosystem. People drinking expensive wine at parties, at fucking in Aspen. It's just like, it's just my party stuff. I mean, we're all like, it's an ecosystem.
So, but I think the question was like, what's the specific industry that you would encourage him to go out and attack right now?
I don't know.
What he means is he knows, and fuck if he's gonna tell you.
I don't know. And it's timing, right? Like the only thing on the horizon of arbing the internet world is the VR world, but is that 30 years from now? Like so many of our friends are gonna lose a ton of money on consumer VR because they want it to be here in 24 months. It's not here in 24 months. And so, I mean, there's things that are the smartification of products, AR, like that's real. Like that's, voice space with Alexa and things that there's gonna be places to play. There's micro trends within our world. I don't know, like things outside of tech, I just don't know. Or in direct to consumer brands is gonna happen over the next 20 years. Like your toothpaste is coming to your house. The channel conflicts between retail and CPG, very real. There'll be money to be made. So there's stuff, but do you have the timing down? Do you know which jockey to bet on?
So you talked about like printing and pressing CDs and drive and having run a sales process or whatever that may be. Like, are there certain triggers, either tangible or intangible, either of you look for in a founder to like signal that it's not one of these crap companies that you're alluding to?
I met a founder yesterday, and he's going blind. And for the past 3 years, he's been building voice applications for himself, because he can't see a screen anymore.
Scratching
he
your
can
own
only talk to
itch.
a screen, right? And so, and it may be a good business, it may not, doesn't matter. But for me, it's like, are you trying to solve a problem that you experience? Are you trying to solve something that bothered you? And this is an extreme example. This is a guy that can't see a web page, can't see his phone. But there are lots of other flavors of that.
I would say mine, less in theory and more in practicality. There's only two things that right now I'm not investing in first-time entrepreneurs that have had zero success ever before. Let me remind you, most of the biggest wins in our space came from those kind of people. So I don't think that's right. It's just what I'm comfortable with right now. I want to see a body of work of doing it before. You don't need a big exit, but I want to see how you rolled. Because I think some of the best companies I've invested in my last fund, the entrepreneur's dealing with the people issue. It's the people issue. They're the right product guy or gal. They have the right vision. They've got a lot of things in place. They're a great engineer. They don't know how to manage people or the people issue. So, but I'm a huge fan. When I think of my ecosystem of the people, when I really poke and prod of the internet, the entrepreneurs that have graced the cover of business magazines from our world over the last half decade, I know so many of them. God, a stunning amount of them sold shit. And I like it. And I associate with it. And that's it. It's important to me because it shows a desire to sell stuff. And that's part of building a business and very black and white. But there's obviously a lot of backgrounds that people come from and win. But those are the two things I'm looking at.
So are you only investing in people who've actually already made some money?
Not made money, but something that I can look at and understand. Not, I have an idea and I think this is cool.
So we're a bit of the opposite. We believe in the drive of the person that has never done it and that wants to succeed so badly. But
So fucking cool.
So
It's just
when you-
different
so-
stage.
so
No,
when
it's
you-
cool. I mean, it's cool because the truth is, it just reminds everybody in this room, there's no right answer. But I do think there's a right answer for you. And I think that's something to really focus on. Not because it worked for that person you admire, but because that's where your strength lies.
Go ahead.
When you meet with an entrepreneur or a potentially fake entrepreneur and decide not to invest in them or the company, how candid are you with that person, those people, and how do you balance that with kind of exactly what you guys have talked about trying to help either people find their way or be frank with each other or get the kind of shit out of the system?
I'm not super candid. I hate confrontation, believe it or not. And it's a weakness of mine. I'd rather not deal with the negative vibes. And so I do a really terrible, poor, non-noble job in my rejections of investments.
Is that also in part because you want to keep the door open should they?
Possibly,
That's also a
maybe,
business decision as well,
maybe,
or,
maybe.
Because you want to keep the door open should they?
It's more predicated, for me personally, it's more predicated on just my general dislike for negativity and confrontation if I don't have to deal with it.
You feel like you just don't want to be disliked?
Yeah,
Is that why you agreed to come here?
yeah,
We appreciate that.
no worries. I mean, I think if, time, Phil can tell them we're passing, that's just good for me. It's faster and I didn't have to like feel with the bad feelings, like I don't know. That's my truth. I'm sure they do it way more professionally.
I don't know if it's a better way to do it.
I don't know.
We deal with, I think as an investor, you deal with uncertainty, and so you're telling someone you're not interested in their company is your perspective, and you could be wrong. A lot of times you've been wrong. We were wrong about Uber. We were wrong about Airbnb.
That's just part of the game.
Yeah, so who knows?
I was super wrong about Yobongo.
What?
Yobongo. I was obsessed. In thesis, I was right. I was obsessed with the fact that Grindr was going to become a male-female thing, which it did, Tinder and all that. So I was chasing that space. There was a company called Yobongo that I invested in 2008, which was People Discovery, Highlight, One. I just kept chasing all of them, and of course it was incubated inside of IAC, the one that won, but I just was convinced that that was going to be a huge winner.
Why was that a category that you felt good about investing in the first place?
All my money in my whole life will be predicated on understanding people's behaviors slightly ahead of the market. That's where I win. I just was 100% positive that people would date like male and female dynamics would translate the same way that male and male dynamics played on Grindr. I just was pot committed, and like I was with social, like I am with VR long term, and then it's a timing game.
So I'm curious for some of the business school students that may not think of themselves as founders, but do want to work for portfolio companies in a functional role that fits their skill set. Sort of what's your thought around that, where maybe in some way we're motivated by the equity that entrepreneurs might be focused on, but it is the right role and it can be a good growth trajectory as well.
Yeah, again, I'm so not interested in like my point of view carrying all that much weight, but that being said, yeah, I think that's really right. Like whatever it is that is most self-aware, if you've got that, roll with that all the way through, not what mommy and daddy or Fast Company or Zucks told you. Yeah, I mean, I think that's great. And I would tell you another thing, we've never lived in an era where you can get to that person so easily. It's just relentless attack. Twitter and LinkedIn and email, and you can get to that person. It's unbelievable who you can get to if you just try.
What's the best way to get to you?
Twitter. I still look at every mention. Believe it or not, Twitter is still the best way.
It's like 1 million some odd followers.
Yeah, but I still look at those mentions. It's data collection for me. It's how I make a lot of my decisions. And so of course I'm going to see the person, that's I'm going to see it. Doesn't mean
Yeah. Are there more questions? Go ahead.
So back to the investor side, I believe a lot of people in this room are interested in pursuing a VC career right after school, like a junior investment professional. What do you guys think about this idea? Do you think there's a lot of fakeness there as well?
I don't know what fakeness is. Gary can talk about what fakeness is, but here's what I think. I think that one of the things that's interesting about being in a venture, right? If you think about, you've got two parties and there's a power relationship, right? And there's this perception that the investor has a lot of power. So your ego is satisfied by being an investor. At the same time, the reality is, for the good businesses, the good entrepreneurs, that's actually not the way it is, right? It's flipped around the other side.
That's right.
And so, it took me, like, I had to start my company and raise money till I realized that, and I was 20 years into my career, till that insight, which helps me invest now, till I realized it. I don't know how you would learn it. Problem with venture is that you don't get paid for 10 years. So you have to be willing to not get paid for a decade.
Well, I mean, okay, but you get paid a lot of base salary.
You also invest
for
an
10
enormous amount in your
Yeah,
fund.
Yes, but Ed's right. Like, do you know how many people have venture firms just for the fucking management fees? Like, that's just real. Like, there's a lot of people that were able to, off their personal brand in this era, build $25 to $150 million venture funds and make a real fucking awesome living just on that 2% because they're thinking so short term. That's real. That's a real thing. It's a nice living compared to other things.
I don't know that they're thinking so short term though, because they're also thinking like, why am I not going to do a great job at this?
Yes, and I think others are like, because we've all been there at 3 o'clock in the morning, like, hey, listen, the booby prize is a great fucking salary to have a great fucking lifestyle. I mean, that's just real. That's not the market,
Right.
but that is the growing, there is a subset growing market
Yes,
of what I
there
just
is.
described. And the other thing is, I genuinely believe that this class doesn't have this many people in it 7 years ago.
It didn't.
Right, so,
And they were all 7 years ago was after 08. Before 08,
yeah.
they were all going to Goldman and McKinsey and Bain, and it was like a third the size.
The far majority of this room, not everybody, but there's an enormous amount of majority of this room that follows a certain track that makes this class have more people in it. And that supply and demand issue is the problem.
It is, but at the same time, I think
I
there's
believe.
but
One
think
man's point
I
of
think
view.
there's a counter, right? The
Sure.
counter is, you had this up on your screen before, right? Before, 10 years ago, if you're a venture firm and you were raising money, you had your slide number 2 talked about this thing called proprietary deal flow, which was the way that you got deals
Right.
that no one else could see, right? But here's the thing, they're all just internet businesses. So there's nothing proprietary. You all can subscribe to App Annie and look at the app charts all day long.
Every day.
I have no advantage over anyone in this room.
No, that's not
right?
true.
No, yes,
That's
it
not
is.
true.
Sure it is. No.
Wait.
You're right. Of course you have an advantage over him.
No, but no.
You have personal brand
but the
equity and
but the
firm
entry
equity.
Point, but the entry point.
Yeah, the entry point's 0.
No, the entry point's the same.
Correct.
It used to be only I saw it, right? Right?
Yes, that
Only
game
you
is
saw it.
over.
That game is over.
Yes.
Right? So the entry point.
Which is
the
why
same.
brand
I may
matters
have-
more now.
Right, but I have reputation. I have a fund that has capital that will do follow-on investments. all that.
Charisma.
But the entry. You're running out of time. But the entry point. The entry point is the same. You may have an insight. You had an insight from selling wine about social media. That
Yep.
was the line
Yep.
for you,
Yep.
right? Right? So someone else could replicate that a different way. Someone else could find
Yep.
that somewhere today
Yep.
on Twitter, on Facebook, right? And so the entry point is the same. That means we have to do better. We have to upstand. We have to hold, our brands, our brand equity. We can't
Or
ruin
it
that,
speaks
but-
to why the game we're playing is actually broken. If everybody's looking at the same data, you all end up in the same place when the opportunity is somewhere completely else.
That's separate, though.
And very important.
Yes. So to answer your question, that's the market to look at.
Agreed?
To someplace else market?
Yeah.
Yeah? Oh, by the
Someplace
way, always, right?
Tulip bulbs.
Always though. There was somebody who had a hand over there, I saw. Yeah.
Yeah, I had a question on that. So you came from Vaynerchuk, and now those guys, Nick and whatnot, spun that off into notation. You're seeing Charlie O'Donnell do the same thing with Brooklyn, Grand Central, and a lot of the bigger ones in the middle. Is there this hybrid space developing where you do have an investment vehicle, but you're also committed to the companies and to the people involved, and you're there day in, day out? Is there more intrinsic integrity with that? Or is that
I don't know if there's more intrinsic integrity. The thing that happened, capital used to be scarce and capital isn't scarce, and attention is the last remaining asset that's scarce. And so if that's the last remaining...
What's the last word?
Attention.
Attention.
Giving someone's attention and getting someone's attention. So if that's it, right, so the advantage that I may have as an investor is how I manage my attention and how I manage the attention of someone who wants my money or someone I've invested in, not the capital itself. So those things are kind of interesting. Like no one cares more about his companies than Charlie O'Donnell. He may be a good investor, he may not, but no one cares more and spends more time with them.
There's a difference between a founder-led, and this goes back to the case we did today, there's a difference between being a founder-led company and saying, I have a really good idea, let's go hire some young person and give them 8% of the company
Yes.
to go, they'll stay here, and even though they can make a lot of the decisions, they can't make all of the decisions.
I get it.
And I am Big Brother watching
Yes.
them and it's my money
Yep.
that I'm spending up from LPs
Yes.
to make this shit all happen.
Yes.
And they get to move out of my space when I tell them, and they get to hire this person. If I tell them that's okay, they're walking around with a card that says CEO, but they're not
I get
really
it.
the CEO. And it depends on some of those spaces, but I've seen that model a lot. And you won't invest in a company where the CEO isn't really the CEO and doesn't have enough equity in the business to make it matter. Because that person took a job. That person is not a founder. They took a job.
I understand. I'll tell you the reason I really try hard is because I care more about my legacy and reputation than anything else in the world.
And that's a great place to end. Thank you. Thank you very much.
Good to see you, buddy.